Welcome. Thanks for joining this discussion from my tax accountant. Look, if you're a UK contractor, there's really only one question that cuts through all the noise. How do you keep more of the money you work so hard for? Well, the answer, a big part of it anyway, is mastering the outside IR35 rules. So let's just dive right in.
Okay, let's get straight to the bottom line. An 80,000 pound contract sounds fantastic, right? But what does that actually mean for your bank account at the end of the day? The answer, and we're talking a difference of thousands of pounds here, all hinges on whether you are inside or outside IR35.
And just look at this difference. It is absolutely huge. On that exact same 80K contract, being inside IR35 means you're taking home about 54,000 pounds. But if you operate outside IR35, that number jumps up to around 62,000 pounds. That's an $8,000 gap. Think about what that is: a new car deposit, a huge boost to your savings, maybe a couple of amazing family holidays. So what on earth does outside IR35 actually mean?
Well, to put it simply, outside IR35 is when HMRC basically gives you the thumbs up and says, yep, you're a proper business, not just an employee pretending to be one. And getting that status is the key that unlocks the door to using a much more tax-efficient limited company structure. That's where that massive difference in pay comes from.
And here's some really good news. The game is changing, and it's actually shifting in your favor. A big rule change coming in April 2025 is putting a lot more of the power and the responsibility right back into your hands.
Okay, so this is the really crucial part. From April 2025, if your client is what HMRC calls a small company, and you can see the thresholds right there, then the job of figuring out your IR35 status is no longer on them. It's on you. Now, this is a game changer. It gives you control, which is fantastic, but it also means you absolutely have to get it right. So, that brings us to the million-dollar question, or in this case, the £8,000 question. How can you be sure that you're genuinely outside IR35? Because making a mistake here can be seriously expensive. And if you remember only one thing from this whole discussion, make it this: your contract is not the most important thing. Your reality is. HMRC will always look past the piece of paper and focus on your actual day-to-day working life. What you do day in and day out is what truly defines your status. So how does HMRC figure out that reality? Well, they use a few key tests. Think about these for your own situation. Control. Are you really the one calling the shots on how, when, and where the work gets done? Substitution. Could you genuinely send someone else with the right skills to do the job for you? Financial risk. Are you the one paying for your own insurance, your own training? And what about equipment? Is it your laptop, your software? These aren't just boxes to tick. Together, they paint a picture of whether you're a truly independent business.
Now, the difference between getting this right and getting it wrong is just stark. Let's make this real. We're going to look at two stories: Amelia, who nailed it, and Julia. Well, Julia's story is a bit of a warning for us all.
So, Amelia's client got reclassified as small after that 2025 rule change. She saw her chance to control and correctly assessed her status as outside IR35, making sure she had all the evidence to back it up. And the result? Boom! She immediately boosted her take-home pay by switching to a smarter dividend structure. And get this, she was even able to claim a refund on tax she'd overpaid in the past. What a win. Now, let's flip the coin. This is the number that ended Julia's story, a £15,000 bill from HMRC. So where did it all go so wrong for her? Well, Julia's contract might have said all the right things, but her day-to-day reality just screamed employee. She had to work fixed hours, her client said no way to a substitute, and she was even using their laptop. HMRC just looked straight past the paperwork, saw the reality of the situation, and reclassified her as inside IR35. That's what led to that very painful bill for back taxes. Okay, so these stories really drive home just how important it is to plan carefully. Let's talk about how you can squeeze every bit of benefit out of being outside IR35 while also dodging those common traps. And honestly, one of the most brilliant examples of smart planning is using your pension. Let's take a look at Marcus. He directed £20,000 of his company's earnings straight into his pension before he paid himself. Now, this is a classic 2-for-1. First, the company paid less corporation tax because that pension contribution is a legitimate business expense. Second, he personally didn't pay a penny of income tax on that money, all while giving his retirement savings a massive boost.
It is, without a doubt, one of the most powerful tools you have.
But look, maximizing your pay isn't just about the smart moves you make. It's also about knowing the traps to avoid, the ones that can catch out even the most experienced contractors.
And one of the biggest, sneakiest traps out there revolves around this number right here, £50,000. This is the magic number where the high-income child benefit charge kicks in. Now, here's the kicker. Your dividends, which feels super tax efficient, they count towards this income threshold. So what happens is a contractor takes a nice healthy dividend, it pushes their income just over that 50K line without them even realizing it, and then months later, bam, a nasty surprise tax bill from HMRC lands on the doormat to claw back all that child benefit. You really have to watch out for it.
And there are a few other things to keep on your radar. You've got the frozen tax bans, which are quietly dragging more and more of us into higher tax rates. If you're contracting in Scotland, your tax rates are different, so you need to do your sums carefully. And even taking on a little side gig can land you on an emergency tax code, which usually means you're overpaying tax until you get it sorted out.
Okay, we have covered a ton of ground here. So let's pull all of this together. What are the key things you need to do right now to make sure you're maximizing your pay? All right, let's do a quick recap. The absolute essentials. Number 1, your reality is everything. Live and work like a genuine business because that's how HMRC will see you. 2, your company pension is your best friend. It's the most powerful tax shields you've got. 3, document everything. Your contract, notes about your working practices, your results from HMRC's status tool. If it's not written down, it might as well have never happened. And finally, know your numbers, especially that 50K child benefit trap, to avoid any horrible surprises. So I'm just going to leave you with one final question to think about. After everything we've talked about, is it possible your current setup is leaving thousands and thousands of pounds on the table? Are you 100% certain you're making the most of your contractor status? You know, getting this stuff right can genuinely change your financial future. If you feel even a little bit unsure about any of this, the smartest move you can make is to get some expert advice. For a personalized look at your own situation, I'd really recommend getting in touch with the specialists at My Tax Accountant. Thanks so much for your time.